Hello and good afternoon to the Wall Street Crossover Show. We have Darren Sinden, market commentator at Admiral Markets. How are you this Monday morning?
Yeah, not too bad, Zach, apart from the rain. I prefer the sunshine rather than the rain, but we can't have everything, can we?
Well, not unless you're going on holiday very soon. Okay, let's go straight into the data released over the European session.
Okay, well, no real data of any note to speak of today, but all eyes on this Eurozone crisis meeting, this meeting of the great and the good, to hopefully try and put the Greek issue to bed.
I think overnight they were saying the Greeks have blinked, and now it looks as though both sides have blinked at the same time.
Yeah, to be honest, I think you try and play down the hype. We've never really seen a concrete set of proposals, have we? Or, official documents. We know that there's plenty of sort of waters across, or bridge, if you like, between the two sides. What we do know is that the ECB has yet again extended the emergency lending facility to the Greeks, because capital has just been pouring out of Greek banks, and they upped it up. I think now they've lent them 85.1 billion euros so far. There's some suggestion on Reuters that they've extended it further again today to allow the Greek banks to keep it operating. Tsipras is meant to be meeting with the IMF head Christine Lagarde and ECB chief Mario Draghi, and then at 6 p.m. the Eurozone finance ministers get together. I guess that the Bulls would hope that that's to sort of ratify a deal.
Well, I think with Mario Draghi in the picture, finally, he is the backstop, isn't he, really, for the whole ECB or the Eurozone financial situation? He is, yeah. It's the first time he's come into the picture, isn't it?
It's really, yes. He's obviously got the final sign-off on that from the financial point of view. Having said that, I think it's the politics that will really, I think that's where the ground has to be given, and that's really down not just to the finance ministers, of course, but probably to the heads of state of the Eurozone countries. Nonetheless, the big guns are there, and we may yet see a resolution. I'm sceptical. Let's not forget, of course, that Greece faces two very important payment deadlines on the 30th of June. So the clock is ticking down and getting ever closer to that implosion point, perhaps. Anyway, let's move on from Greece and look at. Well, if we can move on from Greece, that is. The DAX 30 up 2.5% today in our European movers list. That's at around 11,318, but it had been as high as 11,426, and that was basically on the hope that there will be a solution to the Greek crisis. We'll see. And then the other mover that's really taken my eye today, Sky, satellite TV provider here in the UK, up 3.66% on speculation. I think this was in the Sunday Telegraph yesterday, that the Murdoch family and their various interests have rejected offers of up to £18 a share for their 39% stake in Vivendi. Those are rumoured to have come from either Vivendi or Vodafone, and they could potentially now bid themselves, i.e. the Murdochs may potentially bid themselves for Sky.
They're playing hardball compared to the share price at the moment.
They are. I think the truth is, though, that they tried to do this once before, didn't they? The Murdochs tried to buy Sky, and it fell foul of competition policy. It fell foul of objections from other broadcasters. So it might be easier, truth told, to sell their stake to a third party. Nonetheless, the shares are up 3.6%. It's not a huge move, but it just sort of focuses one's attention again onto this whole cable, satellite, mobile phone space. Which is very much a hot potato at the moment.
New communications.
Yes, as we'll see as we move in further into the show. So if we move on to the next slide, well, here we are. So we can't stay away. Just like we can't stay away from Greece, we can't stay away from what's going on in the telecom / media space. So Altis SA, which we've spoken about before. In fact, literally a month ago to the day we last mentioned this company, has made an offer to buy the telecoms arm of French conglomerate Bouygues. That's quite surprisingly, that's been seen as good news for both Altis, whose shares are up 21% to 139 euros, and Bouygues, whose ticker is EN. They're up to 38.43, and they're up 14.29%. Now, the reason probably for the sharp bounce in Bouygues is quite clear. Obviously, that bid from Altis, but they've offered around 10 billion euros for the Bouygues mobile telecoms business. That contrasts with the total market cap of Bouygues of around 12.95 billion. So a division suddenly is worth, the lion's share of the group on that valuation. The Bouygues board will meet on Tuesday to debate the offer. It clearly, as we've just outlined, it offers shareholder value. I'd be very surprised if it was completely turned down. But things in France are never as clear cut as that. So Altis has also approached at the same time a competitor of Bouygues Telecom, a thing called Iliad, that owns a mobile network called Free. Their shares are up by 12.44% this morning to 230.5. So, Altis is trying to do two things at once.
It's an absolute sort of frenzy of M&A speculation and activity.
It is, and then you can, when we spoke about Altis a month ago, we mentioned them in conjunction with their purchase of a US cable company called Suddenlink. But just to give viewers a bit more background, Altis has also recently bought out a big chunk of Portugal Telecom, and it edged out Bouygues and the French government in a battle to buy Vivendi SA's mobile network SFR. So all of the, we mentioned Vivendi on the European moves, the wheels within wheels. Competition authorities will probably look very, very hard at these two potential purchases for Altis. And as I say, the French government's in the background, so it won't be straightforward, but Mr. Drahi, who runs Altis, is really trying to make his mark on both sides of the Atlantic, and this has potentially also got ramifications for Dish Networks and T-Mobile in the US, who are rumoured to.
We have a domino effect all over the place.
Absolutely, yeah. So keep an eye on this space. It's not going away. And so if we move on to the next slide, it's a thin calendar in the US, Zach, as well. I just literally one data point today, which is existing home sales for May. And the forecast here is for around 5.25 million new sales, or existing home sales I should say, versus a prior read of just over 5 million. If we did come in around 5.25 million, then we'd be matching the reads that we saw back in the summer. The highs were in sort of summer 2013, so it would be quite good news if we could deliver that today. But
it was the last time the situation in the US was booming, basically.
Effectively, yes. So it could be a sign that people are feeling confident enough to be buying homes. Obviously, the availability of mortgages might be a dampener on this, but we shall see. And then in terms of pre-market movers, so the one that, in terms of pre-market movers, that's just taken my eye first of all, is Cigna Corporation. We recently talked about these. They're up 8.41%. The ticker is CIUS. If you're looking at these, $169. The pre-market price, as I say, up 8.4%, simply because Anthem, ticker ANTM, has offered $184 a share, says Bloomberg. We spoke about these about a week ago. We suggested that Anthem had offered $175 a share. It looks like they've upped the ante, and the market now senses that there's a deal to be done. So that's good news there if you're involved there. And then another bit of M&A, Williams Companies, ticker WMB in the US, $61.80 pre-market, up 27%. This is a gas and oil pipeline and transportation company. They've received an approach from a rival called Energy Transfer, worth about $48 billion, according to the speculation, that the offer, and that's against the Williams Company's market cap of around $36 billion as of Friday. So, simple math of 25% premium, yeah. So that's an interesting space to watch as well. And in terms of levels for the equity markets today, notionally higher, so 67.80 in FTSE and 68.46 are the two levels to watch there, to the downside and upside respectively. In the DAX, we've gone with 11.246 and 11.384, obviously well off the highs, but if it wants to push on again, it's got to take out 11.384. For the S&P, a bit of a mixed reaction on Friday, so we're now looking at 21.10 to the downside and 21.22. We've tightened up the upside level. Similar looking candle in the chart for the Dow as well. So 18,010 now, our downside level. Plays 18,120, the level to watch for on the upside. The euro has given a bit of ground against the dollar this morning. As you know, we talked about the relationship between the euro and equities. So a weaker euro is another factor perhaps for strong German equities, but 113.22 now is our level on the downside for the euro, 113.86 to the upside.
Although you would have thought that if there really is going to be something positive with the Greek situation, the euro would have spiked up like the indices.
In theory, yes. Like, and if it may well do so on some good news.
But they want to see some concrete action in the FX market.
They certainly do, yeah. And in terms of Aussie dollar, US dollar, just tightening the range here again. So 77.40 on the downside, plays 77.71 to the upside. Similar story in dollar yen. We're now looking at 122.88 on the downside, plays 123.45. That seems to be settling back into a range, I feel, at the moment. And then cable, some round number psychology comes into play here. So 158.00 at downside level versus 158.75. Quite a quiet morning today, apart from Greece. I wonder if this afternoon will be any livelier.
Well, I suppose the Greece situation is enough. Even though many people say they've had enough of it, it does seem to be going sort of towards a finale or a conclusion of some kind finally. So that's it for the Wall Street Crossover Show. Thank you to Darren Sinden, market commentator at Admiral Markets, and we'll be back at the same time tomorrow.